If you are currently an algorithmic trader considering trading with a Forex bot, or you've traded with a Forex robot in the past, then you'll want to watch this entire video. In this video, I'm going to reveal to you the #1 problem with Forex bots, and most importantly, 3 things that you can do about it. Watching this video will likely save you thousands of dollars spent on phony black box magical trading bots, and educate you on how to take your existing bot or algorithm and make it perform better over a longer period of time. And the reason you should listen to me is because I've been trading with Forex bots for like the past 6 years. And I've experienced the good, bad, and the ugly of trading with Forex bots and testing dozens and dozens of different Forex algorithms. And at this point, we have what I believe is maybe the most successful algorithmic Forex trading group on the internet. We've literally helped over 500 people become professional funded prop traders with Forex bots, so we know a thing or two about this topic. Okay, so let's dive in. So here's how I came to discover the #1 problem with Forex bots. Basically, what happened to me was that I would go out there and I would look for a Forex bot that had a really strong back test historical performance, and I would go and I'd buy this bot. And I've actually done this like twice, where I spent like $10,000 on a single bot that I thought looked incredible. So what happened is I purchased this bot and I went out there and I started trading in the live market. And actually what happened was for like the first 2 to 3 weeks, it started performing incredibly. It was doing really, really good. I was making all this money. I was so excited about this. I wake up in the morning, profits. And it worked incredibly well for 2-3 weeks. And then all of a sudden, it's like it completely stopped working. And pretty much every single day I was in the red, and I had exceeded the max drawdown in just the first month than what had happened over the course of like the past 3 years that was shown on this back test. And so I thought, oh, well, maybe that one wasn't good. So I went out there and I found a Forex bot with an even better back test result that showed thousands of percent gain with really low percent drawdown. And it had performed for over 10 years. So I thought the chances of this thing working are probably really, really high. And the same sort of thing happened. It was for 2-3 weeks. I had amazing results with this strategy and this bot. And then boom, all of a sudden it stopped working. All I did was lose money time after time after time again. And this is how I discovered what is called curve fitting or overfitting, which is the #1 problem with Forex bots. And just so you can understand what curve fitting is or what overfitting is, let's take the example of a lock, for example, and a key. So you have this lock at your front door, and then you have this key. You go in, the key is fit perfectly for this lock, and it goes in and opens the door, right? And this is like when you have a trading strategy that is fit perfectly for a current market condition. It just works beautifully. However, if you're to take that key and you're to go next door to your neighbor's house and you're trying to put that same key in now a new lock, chances are it's not going to work. And that means that maybe you have this lock or you have this trading bot or algorithm that worked really good in one environment, but when you change the environment to this new lockbox, it no longer works. And so what curve fitting is simply when you tailor your trading strategy too closely to past market conditions without giving thought to how market conditions can perform in the future. So again, when you're developing your trading bot or your algorithm, if you take into account the past performance too much, then you may not perform as well in the future when we break it out of that box, or what we call out of sample, which I'll tell you about in a second. Now, why does overfitting or curve fitting happen so often? Well, because most people that are new to algorithmic trading, they're just going to look for the trading strategy that has the best back test or the best historical performance, which is really not that important. It is important to a certain extent to give you an idea of how the strategy could perform, and it's better than having no back test, but it ultimately does not mean that this is how the strategy is going to perform moving forward. And also, overfitting or curve fitting can happen when somebody uses too many different indicators or it's excessively complex. It is basically trying to account for every single market variable in the past. And a lot of the times when this happens, you use a whole bunch of different indicators and stuff like that. It becomes too fit to historical data, and any like small random noise in the market, it'll just kind of take losses on versus trying to catch the overall direction of the trend of the market. Now, before I tell you the 3 things that you can do to overcome curve fitting or overfitting, I want to talk about why this is problematic. And the reason why it's problematic is, let's say, for example, that we build a weather forecasting model that has been trained exclusively on like tropical climate. Let's say, for example, it is trained specifically on climate in South Florida. Now, if you're to take the same weather model and you're to go to somewhere in the desert like Arizona, and you're going to try to predict how the weather's going to perform in Arizona on a model that was only trained in tropical weather, then the chances of it being able to actually predict what's going to happen in the desert is very unlikely. Similarly, an overfitted Forex bot might perform really, really well in certain conditions that it was trained upon, but when it gets into different market environments, it won't perform as well. And the big problem with overfitting or curve fitting is it just assumes that the future market is going to be the same or similar to the previous historical market or the past market, which is not a safe assumption considering the market is always changing. So now that you have a little bit of an idea of what curve fitting or overfitting is and what the problems are with it, let's talk about what do you actually do about it. And from what we found is there's three different things that you can do about it. Number one is you can use something called out of sample testing. And this would be similar to like when you were learning how to drive and your mom or your dad would take you to a parking lot to drive prior to actually hitting the live road. By driving in a parking lot, this ensures that you can handle the vehicle, which is like the Forex bot or algorithm, not only in a controlled environment, which would be historical data, but also in real traffic conditions, which would be the live market. So what does this mean out of sample testing in terms of trading goes? Let's say that we built our trading strategy based off of the year 2023, from the start of January all the way to the end of December. And that's what we built our trading strategy off. We wanted to try to have the best data during 2023. So this is how our strategy was built, but then we want to take it and go out of sample. So this 2023 date range, this is what's called in sample. Out of sample would mean that we go ahead and we test this strategy for 6 months in 2022, 6 months in 2021, and 6 months in 2020, just to see how it would perform on historical data that the strategy itself wasn't actually traded on. Now, you could also do this and you could take that and move forward or live test it forward for a period of time, which is not 2023, which the algorithm was actually built off of. So this is what out of sample testing is. And it's similar, like I mentioned, to driving your car in a parking lot because it makes sure that you have control over the vehicle. And it also allows you to get some sort of experimental value in a certain controlled environment before actually going out and hitting the road. Now, the second thing that we found that you can do to overcome the curve fitting problem is by being more simple in the model design. Now, what do I mean by that? You can build a trading algorithm that has a whole bunch of different indicators and it may work really well on past data. But what we found is actually the simpler the model is, or the less indicators that you have and the less things that you have going on, the less tightly fitted it is to past data, the better it is to perform in the future. So this is like a simple model design. And the best way that I could explain an analogy for it would be to think of like a Swiss Army knife. Now, a Swiss Army knife is not the best tool for every single project, right? However, it is a good overall tool that can work well in a bunch of different environments or a bunch of different projects. Even though it might not be the best tool, it's also a good enough tool that it can work on a bunch of different projects. And so that's the idea with building a simple algorithm or a simple trading strategy or a simple bot, is to make it simple in design so it can work in a lot of these different market scenarios. And the third thing that we found to be really successful is to simply do what we call curve fitting on the fly. Remember how I told you early on when I was buying those bots, I had those really good track records, and then they'd have like this 2 to 3 week period of time where it would perform really, really good, and then it would stop working? We found this to be what's called like the peak performance period. And what we found is that if you can actually continue to curve fit on the fly, meaning that you're continually optimizing the strategy every single week, then you can stay longer in this peak performance period, which ultimately has yielded really incredible results for our community. Hey, so if you'd like to see how we're using a Tesla-inspired trading AI to build an algorithm or Forex bot that is consistently changing, adapting, and curve fitting on the fly to meet real changes in market conditions, then go ahead and check out that video right there.